Good afternoon, all, and welcome to our webinar today, IR35 and other taxing topics. Today's webinar is brought to you by Giant Group, a global contingent workforce management company based in the UK, and we're lucky enough to also be joined today by our guest speakers, Nicole and Sam from Qdos. Just to start off by introducing myself, I'm Betty. I work here at Giant Group as part of the marketing team, especially focusing on our events and webinars. This afternoon, I'm delighted to welcome our keynote speakers to guide us through this session. Starting with you, Dan, could we please go round and do introductions and maybe also tell us where you're based?
Thanks, Betty. Yeah, good afternoon, everyone. Fantastic to see how many people we've got joining today. I'm Dan Haslam. I'm Group Sales Director for Giant. So I'm working from a cold kitchen in Cheshire at the moment. I think we've got every county in the country, plus some foreign locations as well. So really appreciate everyone jumping on today, and hopefully you'll find it useful. Nicole, do you want to introduce yourself?
Yep, so I'm Nicole Slowey. I'm the Operations Director here at Qdos. Been in the business for 10 plus years now, and very much a kind of SME in all things IR35 and employment status. And we're in a rather dreary Leicestershire.
Completing the set, I'm Sam Cox, Commercial Director here at Qdos. I'm located about 6 metres top left in terms of office location, but also based in Leicester. I'm a underwriter by trade, so I come at things from a insurance and risk management perspective, but obviously been working with the business for getting off 20 years now. I have a large exposure to the IR35 world and our approach to guiding businesses through it.
Amazing. Thank you so much, all. We're really excited to have you with us here today. So for today's session, we will focus on the latest updates around HMRC's activity surrounding IR35, updates on recent cases, and how that might help us evolve our thinking about IR35, as well as to look at the use of statement of work arrangements. We'll then discuss the implications of the recent High Court hearing of the PGMOL case involving football referees, and then we'll look ahead to the potential changes to the UK employment law that have been signposted by the new Labour government, and discuss with our experts how this may impact the contractor workforce in the UK. Finally, we'll discuss some of the compliance and legal considerations you may need to reflect on in order to mitigate for these risks, and some practical suggestions on how to review your current processes when hiring contractors, including the use of insurance to prevent liabilities. We expect that there'll be loads of questions, so please send them via the Q&A function, and we're going to leave 20 minutes or so at the end to address as many as we possibly can. So, without further ado, let's begin to ask the experts some questions. And to the person asking about a recording already, that will definitely come through. So hi, Nicole. For some time now, we have seen an increasing use of statement of works as a way to engage contractors. Would you agree? And do you have any insight into how these arrangements shape up when scrutinised by HMRC?
Thanks, Betty. Yeah, completely agree. So in the run-up to IR35 reform in 2021, and since then, we've seen a real significant change in organisations seeking to engage service providers, perhaps instead of your kind of conventional, traditional recruitment agency resource structures. A lot of the rationale behind that was because there were kind of a lot of marketing surrounding this being a silver bullet solution to get out of IR35, because of the kind of carve out that exists within the rules, where if a hiring organisation is in receipt of fully contracted out services, they are not the party that's responsible for applying the IR35 legislation. It's actually the supplier in that scenario, i.e. the one who's individually engaging the limited company workers. It gets a little bit nuanced again, because essentially that supplier organisation needs to be considered medium and large in order for them to have the responsibility. So there was a consideration for lots of organisations in that time, and sort of since reform was really to look at managing risk, and is this a solution for managing risk, and importantly, and certainly the position that I often think is the better position to come at it from is what is the right type of resource or service that I need in my business? Is it outcomes? Is it deliverable based? Or do I actually want and need headcount? Is it resources? And that's the real important thing, is that when it comes to these structures being scrutinised by HMRC and reviewed by HMRC, there is a clear and distinct difference between the makings of a resource provision versus the makings of a contracted out service provision. And those suppliers providing those services are taking on a significant amount of responsibility from a fulfilment perspective. In theory, they will be taking on a greater degree of financial risk. And I know that Sam's got a couple of thoughts on that from an insurance perspective as well. So there's a lot that kind of goes into whether it's compliant insofar as does it meet the kind of criteria for being legitimately contracted out, which is one area for HMRC to consider. But also, is it actually the right fit from an organisational perspective in terms of the types of services that that particular hiring business actually wants and or needs?
Amazing. Thanks so much for that, Nicole. Can you now share with us what activity you have seen from HMRC in this area and how they approach the assessment of these arrangements, if possible?
We've seen a significant amount of activity from HMRC in this area. So of all the hiring organisations that Qdos are currently supporting in IR35 compliance checks with HMRC, HMRC is scrutinising contracted out services as part of all of them. Their approach has evolved over the last couple of years, where these investigations have kind of been working their way through. And what HMRC really wants to know is, what's the due diligence? Have you and your supplier actually undertaken a review of the arrangement between both of the parties? Have you considered the contractual position? Have you considered the actual reality around the service fulfilment and how the services are delivered or changed and paid? And more recently, HMRC has been really focusing on the kind of level of skill and qualification of the people in the business who are undertaking those reviews. So do those people have the right prerequisite skills and expertise to be able to assert an actual opinion as to whether they consider something to be legitimately contracted out or body shopping, hidden headcount, resource provision? So we know it's an area that HMRC are looking into. And to be honest, from a Qdos perspective, it's something that we want to help support organisations with, because I do actually think that it's a potential black hole for a lot of businesses. I think that the level of knowledge and education in that space, whether it be in procurement functions, whether it be in business units around the concept of IR35 and how it might apply where you are engaging professional service providers, suppliers, consultancy firms, is probably still quite low. And I think that medium and larger organisations have a bit of a challenge, because the IR35 and compliance responsibilities are fairly siloed across the organisation. Organisations have done really well to get everything kind of under their clear and obvious contingent labour space ticked from an IR35 compliance point of view. But I think there's definitely more work that businesses can do to make sure that in the event of these HMRC checks, that they're fully confident and compliant in making sure that they have a correct view of the arrangements between them and the supplier, and importantly, the correct party in the supply chain is actually fulfilling the IR35 obligation. Because fundamentally, if there are contractors in the supply chain, a party has an obligation to consider the IR35 status of those workers.
And Nicole, I was just going to add into that, like, definitely agreeing with what you're saying there. What we often find when we're talking to end hirers is that there's definitely a better process and understanding of contractors that are more obviously contractors that they're either directly engaging with or via recruitment suppliers. But then when it comes to SOW, I think even the people in procurement within those large organisations understand that it's a little bit of a black box. Like, they're kind of not clear on what's going on in there, what the type of arrangements are. And it makes everyone feel a little bit nervous. I think everyone accepts that, there's this other area over here, and not everyone's kind of clear on what's going on, and we need to do a deeper dive. And maybe the HMRC activity around this is prompting people to take a closer look.
Yeah, I think so, because in terms of how we position it when we're engaging with hiring organisations, in the same way that procurement functions will have processes around general supplier due diligence on things like data, GDPR, cybersecurity, InfoSec, all of these aspects, IR35 and the provision of contractors within supply chains needs to be part of that risk profiling when you're engaging suppliers. And that is a big change. And I think that you're right in that there is a kind of awareness of this is a bit of a kind of a gap here and we're not quite sure. So I think it's really important that organisations seek to increase their understanding and look at where they can bring IR35 into the kind of general risk assessing of suppliers that they're engaging, both at the outset and as the relationship progresses and changes over time as well, is pretty important.
I think just to add there, you'd hit the nail on the head, Nick, at the start of what you said, in that there does need to be a a frank appraisal from clients and hiring organisations as to what they're actually looking for from their partner.
Yeah.
If it is pure resource bums on seats that's required, we do see some nefarious operators trying to structure SOW or contracted out services on paper around what is really that a pure recruitment service that's being provided. And I think that's at the heart of why HMRC are perhaps scrutinising that in the inquiries that we've seen to date, because there is that awareness that there is some more murkier operations around that kind of structure. When it's done legitimately, it's perfectly viable and can be easily managed. But when done illegitimately, it can be potentially used to deflect tax liability, which is less than ideal.
Amazing. Thank you all for talking on that topic. Sam, perhaps you can also give us a bit more about your view on the risks at play for both the supplier and the client, and what insurance consequences there could be, and even what organisations can do to mitigate these.
Sure. So I think it's probably important to distinguish between IR35 risk and insurance arrangements and then some more general considerations as well. So the more general commercial insurance considerations I'll come back to, but keeping things focused on IR35, it's probably worth just a little bit of a recap in terms of what those obligations are for the various parties. So under a genuine resource provision, where you have an intermediary providing contract staff to a hiring organisation, unless there's a small business exemption at play, it will fall to that hiring organisation to complete a status determination for that worker. So to inform all parties involved as to the IR35 status of that particular individual. Now, if the hiring organisation fulfills that obligation and takes reasonable care in doing so, then the tax liability actually passes up the chain to the fee payer, so typically a recruitment business. On that basis, under a pure recruitment model, then once that hiring organisation has discharged that responsibility under the legislation, then really they are by and large free of a tax exposure in respect of IR35. Where it's a resource provision, though, that hiring organisation becomes redefined. Where there's a contracted out service, that service is being provided to a client who in other contexts could be seen as a hiring organisation. But because there is a genuine overarching service provision by that third party, they would become the hirer of the contractors who are engaged to fulfil that contract. And they therefore become responsible for the IR35 status determination. Again, if it's a legitimate operation, then that's a completely straightforward process to manage. The end client has no exposure because they're not engaging workers. They're in receipt of a resource. They're in receipt of a service rather than a resource. But then ultimately the consultancy becomes the both the fee payer in a lot of cases, but also the hiring organisation, and has their own liabilities to fulfil. So provided they're managing that correctly, again, it's fairly straightforward to mitigate risk in that respect. Where there is a potential blind spot for organisations, though, is where that contracted out service isn't done legitimately. It can be set up on paper as contracted out service, but in reality, if what is being provided there is purely bums on seats staffing revision, then what HMRC have the ability to do is scrutinise the arrangements with the hiring organisation, deem them to be the client is the hiring organisation rather than the contracted out service provider, But in those cases, it's very unlikely that the client/hiring organisation will have carried out a status determination. In that respect, they won't have met their obligations of the IR35 legislation and would then be liable for the tax, interest and penalties should any of those workers be incorrectly classified as outside of IR35. So whilst, again, I've sort of alluded to some sort of more shadier operations in certain spaces, that's what was intended in those circumstances was to remove an obligation and a risk from hiring organisations. But adopting an illegitimate contracted out service is something that actually could potentially increase the exposure from an IR35 perspective for those types of businesses. So it's really important to take advice on the legitimacy of those contracted out arrangements. It's important to consider what you really want from those types of arrangements. Is it resource provision or is it a managed service? And to make sure that in the event that HMRC scrutinise that, then it's clear that there's a service being provided rather than just resource. It's to complicate things somewhat, HMRC haven't been particularly clear on the guidance around that. Now, they've obviously addressed at various points since the legislation what they expect to see around a contracted out service, but there's no sort of legislative footholding there, which does cause a certain degree of uncertainty, which is why taking advice and approaching this with an honest frame of mind as to what businesses look for is so important. So that's the IR. Sorry, Elizabeth. Did you want to add anything in there?
No, I just thought you might be ready to move on, but please carry on.
I'll just take a quick detour on the on the way. So obviously that was the IR35 risk, and that mainly is a consideration for hiring organisations / the businesses that are in receipt of a managed service. The other angle from a risk perspective to consider is actually from the service providers themselves. So if you are a provider of a genuine contracted out service, what we have seen is that a lot of those businesses have come from a recruitment first background. So whilst they are providing a managed service, their bread and butter may be recruitment, or certainly historically they will have operated in a pure recruitment capacity. Where the exposure sits there, not from an IR35 perspective, but just from a standard course of business, is that in providing that managed service, they will become responsible for engineering services, IT services, any other core service offering that those contractors are delivering. And what we have seen is a large number of maybe smaller firms, but you know, it's true across the market. There is perhaps a little bit of an oversight there, where these businesses, when push comes to shove, still see themselves as providing a recruitment service, when in actual fact contractually they are responsible for a specialist professional service of another nature. And it's really important for those businesses to consider their insurance requirements at that point, because if you've insured as a recruitment business and all of a sudden you're facing a claim as a result of a major IT issue, then your recruitment insurance policy may not cover you for that IT related claim. So again, it's all about being upfront and transparent about the way that you want to operate, and working with an insurer and a broker that understands the exposures that you've got there. But if that's something that's changed within a recruitment business, i.e. historically it was pure recruitment, but now there is a bona fide consultancy element, that's something that really does need an eye.
Thanks so much, Sam. And then coming to you, Dan, do you have any observations on the use of statement of work contracts, and what are your thoughts?
Well, I think Sam was hitting the nail on the head there, where he was just talking through there's a lot of different variety in terms of what people would classify as a statement of work or a consultancy agreement. When you get stuck into the detail, you've got some very, very well constructed ones with real clear milestones, deliverables, etc. And then you've got others that do feel like, to use the term, body shopping, where it is really a recruitment service that's sort of being dressed up as. But I think, it is very a popular way of engaging. So we've got to acknowledge that, it's the reason why HMRC are looking into this arrangement, is because there's, most companies will engage with consultancies. It's a regular way of working. We don't just see that in the UK, we also see it with our overseas clients as well. So there's nothing wrong in principle with someone engaging with a consultancy on a statement of work basis. As the guys have said, though, clearly what drives a lot of that activity post IR35 is the way that the employment risk can be passed to the consultancy for them to manage. So, we certainly work with a number of consultancies who acknowledge that whilst their up contract to their client is well constructed on a deliverables basis, that actually the way that they're engaging some of the contractors and freelancers to deliver that service means that some of those workers are inside and some of them are outside. So where they're inside, they'll lean into us to support there. I think we're in a better place than we were sort of immediately after the off payroll working changes. There was definitely some pretty poorly executed arrangements that I saw in the market, both in the public sector and the private sector, where a quick knee-jerk reaction was to sort of put in a statement of work to cover this group of workers, and they interestingly seem to have milestones that were very close to monthly milestones in terms of driving payment. So it was clearly some body shop type activity that was going on there, but I think we've progressed a little bit. That said, with HMRC specifically looking at it in a lot more detail now, I think they'd always intended to get round to sort of tackling statement of work. And as Nicole was saying, that we were all seeing enhanced activity from HMRC trying to open up this Pandora's box of statement of work and delve into the detail. So a lot of our clients are asking for us to sort of look through that and try and give some guidance as to what's actually under the bonnet and where there might be some risk. But I think for the most part, certainly for the consultancies that we engage with, like, they're all super keen to get it right. I think they acknowledge that they are bearing that risk, and they don't want to increase that level of risk. So they are keen to do things in the right way. But as we said, it's a grey area. HMRC haven't been particularly helpful in giving any clear guidance around it. There's, in the industry, we've got an idea of what good looks like, and Nicole and Sam will advise on trying to move someone as close to what good looks like as possible. But you need to make sure that you can't just leave that part of your contingent workforce as that black box. You do need to lift the lid up, because ultimately, if there's something going wrong in there, then that potentially is going to pose risk to you as the ultimate beneficiary, the end hirer that's benefiting from that work.
Thanks so much. And now we're going to move on to Nicole. If you could please explain the background to the PGMOL case, why it was important and what was the outcome, and how has this got the potential to create impact?
I'm going to preface this by saying we could probably do a full webinar just about PGMOL, so I will try and keep my answer as high level as I can. So PGMOL, professional game match officials, are the body who represent and provide and train referees to Premier League, FA Cup and various other competitions in the UK. This case has been ongoing for quite some time now. And what is important to say is that this isn't strictly an IR35 case, so there are no limited company contractors involved. The employees, or this selection of individual referees that are being considered, are self-employed. It's worth noting that PGMOL do have a section of employed referees, and this isn't the population that are up for debate. It's this particular self-employed population. So we received confirmation as to the outcome from the Supreme Court appeal decision about just a little under a month ago now. And fundamentally, the outcome is that the case is actually not come to a conclusion yet, and that it's been remitted back to the first tier tax tribunal, which will be the 5th level of judicial review under this particular case. But from a status perspective, which informs considerations under IR35, what the appeal has actually upheld are points around 2 key aspects of employment status, one specifically being mutuality of obligation, and the other being around sufficient degrees of control. So why it's important is that it effectively sets case law on these particular things. If we dive into mutuality of obligation for a second, the outcome of the PGMOL case, at least one interpretation of it, is that it largely upholds HMRC's long-awaited view that if there is work and individuals are paid for the work, that confirms that there is mutual obligations. And then from a control perspective, it talks about the degree of control. This isn't new. These have been aspects of key employment status case law that have been considered for a really long time, but it does certainly push the kind of pen a little bit insofar as how mutuality of obligation is actually considered, and there are specific circumstances that really need to come to light. But I think that fundamentally the overall reliance on mutuality of obligation as a key status test in isolation, or maybe carrying sufficient weight, is likely going to change. And from a control perspective, this isn't new, that the specific scenarios that the referees were subject to was a bit unique. There were standards that they had to adhere to in terms of rules. They were subject to post-match reviews and potential kind of disciplinary proceedings to an extent if they had made incorrect decisions in a particular game or match. So there were aspects of control around here that were a bit unique and a little bit nuanced. So without it becoming kind of too technical, fundamentally the kind of key takeaway really from PGMOL that we would suggest that organisations take is that it has sharpened some focus around how key status tests can be applied and considered. The ruling is now part of case law, but I would probably just caveat everything that I've just said there is that that's only one interpretation, and the nuances of this case have actually meant that there are lots of advisors in the space who have different takeaways from PGMOL and how they think that it's going to affect the determination process for both employment status and IR35 status going forward. So it's definitely something that's still developing, and ultimately we still don't actually have a final decision on the case as well until it's actually remitted back to the FTT, and then we will actually see what the overarching outcome of it is. But given the result of the Supreme Court ruling, there is no kind of major expectation that the result could suggest that the referees in this scenario would be considered anything other than employees.
Amazing. Thanks for that, Nicole. Dan, we're now going to move on to our next topic concerning the potential upcoming changes to the employment bill, which are being considered by the new UK government. Please, could you give us a brief overview of what changes you anticipate and how this may affect the market?
Yeah, I'll try, although it's 150 pages long and contains 28 different measures. So I'll definitely try and keep it brief, because I think we'd all be bored if we went into too much detail there. Well, I think just to say, before, on the run up in the election process, Labour were really vocal about their desire to sort of radically shake up the UK's employment laws. In the manifesto, they were stating that they felt that Britain's employment laws were really out of date and not fit for purpose for the modern economy. And they also went on to commit to proposing a new employment bill within 100 days. So there've been weeks and weeks of speculation about what the bill might contain since Labour were confirmed as the new government. And all that speculation came to an end last Thursday when we got the first copy of the draft bill, and it was unveiled. So first things to say, well done. They managed to achieve that in 97 days rather than the 100. So that's at least one thing that they've delivered on so far. It is lengthy, as I said, 150 pages long. Most of the employment measures, there's 28 of them, we don't really think will be coming into effect until 2026, because the nature of what's been rolled out, it's really what I would describe as a framework bill. So it's setting out a direction of travel. It's setting out a number of areas that the government want to look at changing. But because of the significant impact of a number of those measures, there's going to be a lot of lengthy consultation that takes place. So consultation, for those that aren't aware, is when the government comes out to industry, to the market, to stakeholders to gain feedback on how they think these measures might impact the market, and trying to avoid any unintended consequences of making these changes. So I think before we go into what was in the bill, probably important to say what wasn't included, and that's really relevant to our sort of IR35 conversations that we've just been having. In the manifesto, Labour was speaking about wanting to tackle and simplify employment status. So currently we have a three-tier system of employee, employment worker, and self-employed. And Labour are really keen to look at trying to reduce that down to two statuses. Now, that would have huge consequences, both from a tax and employment law, of making that change. It's notable in its absence. There's nothing in the bill that talks about that particular point. However, they have set out in a separate section of this update, which was called Wider Reforms, that they are going to conduct a consultation to look at bringing in or to discuss the potential for that to worker status moving forward, to employment status moving forward. So, but honestly, I would not think we'd expect to see any significant change here beyond sort of 2025, if not 2026. It'll be a lengthy period of consultation, but clearly there'll be some big impacts on Qdos's world in terms of IR35 and status. So we'll all be keeping a keen eye on that. So let's move and look at some of the key points that the government have said that they want to implement within the bill. The first key point is the introduction of day one rights for employees, subject to a limited probationary period. What does that mean? Well, day one rights would include things such as protection against unfair dismissal, statutory sick pay for employees from day one, parental and bereavement leave. They're also looking at ending 0-hour contracts, or certainly making it more difficult to engage there. We'll come around to talk about that shortly. Trying to reduce the ability for people to fire and rehire and replace, and also including a right to request flexible working where reasonable and where practical. And then the last point, stronger dismissal protections for pregnant women and new mothers, which I think everyone would certainly welcome. So the really interesting bit that came out for me was that this day one rights piece actually appears only to apply to employees, and it suggests that workers, so that would be, for example, agency workers that are supplied via recruitment agencies under a contract of service, they may not have those rights. So these additional rights apply to employees, but they don't apply to workers. And I think that may be because of the impact of the consultation period. So the fact that they're looking at kicking the employment status conversation further down the road, I think that means the government's decided not to sort of tackle that for now, but perhaps they'll bring workers into the same scope as employees later. We'll just need to take a view on that. What is obviously interesting to note, though, is that although these additional rights are being excluded for workers, where a lot of recruitment agencies are engaging contractors via umbrella companies, the typical umbrella engagements tend to be employment-based contracts. So it's really going to be putting a lot more work on umbrella companies like Giant to basically put together processes to accommodate these new requirements. From that list of additional rights, I think, as I said, one of the big key changes or areas that we think the government are going to press hard to change is the use of 0-hour contracts. So what the bill sets out is changes basically to limit how frequently 0-hour contracts can be used by workers. And in particular, I think focusing on those that are on really low hour arrangements. So what they're saying and proposing in the bill is for workers who work particularly low hours, and we've not yet got real clarity on what that is, those workers have the right to a guaranteed number of hours within a contract to reflect the regular working patterns that they have over a defined period. And into the detail of the bill, that defined proposal appears to be something like 12 weeks. So effectively looking at how many hours someone conducts frequently over that 12-week period, and they have an entitlement to request a contract that supports that number of hours, as opposed to a 0-hour contract, which with no guarantee of any form of work. And the government, I think, want to progress with that quickly. So the first one of the first consultations to be launched will be on the 0 hours piece. So I expect to see that measure moving quite quickly through the bill and through Parliament. I think it could have quite a wide ranging impact on recruitment businesses and any sort of other company that engages works on these sorts of contracts. Obviously, the reason for using those 0 hour contracts is they're very, very flexible. So the clauses that are coming in here are going to sort of reduce a little bit the amount of flexibility that those 0 hours arrangements can provide. 3 key clauses I'd probably lift out. The first is that right to guaranteed hours, which I've spoke about. Second is shifts and the right to be given reasonable notice to be called in for a shift. And then the third one is the right for payment if those shifts are then cancelled or moved. So that clause 1 of right to guaranteed hours means that a firm that engages an employee must, after that 12-week period, offer contracts that supports the hours that they're working if they're requested. The clause 2 requires firms to give reasonable notice of a shift. That applies to 0 hour contracts and contracts where the employer must make some work available, and they must provide reasonable notice of any cancellation or a change in that shift. So I think on the face of it, those last 3 points seem to be fairly reasonable from a worker's perspective, but clearly from a business's perspective, that is going to factor in additional cost and additional processes that they need to think through to make sure they fall in line with those changes. But I think just overall, my comment would be probably a bit of a well done to the government for taking this issue on. There's been a lot of inertia from the previous government on these points. I think it's great that they're trying to tackle it, but of course any change is going to be received positively and negatively by people.
Amazing. Thank you so much, Dan. And how do you anticipate the market to react to these proposed changes?
Yeah, well, I think from a business's perspective, the changes are probably going to be viewed as potentially stifling the economy because it's going to be increasing costs associated with businesses that are engaging employees and workers and these temporary workers. So there's going to be some pushback, I think, from business. I think the CBI were really heavily involved in lobbying as this employment bill was being put forward. And in fairness to the government, there's a number of consultations. So I think they've heard the concerns from business, and I don't think they've ploughed on as far as some people might have predicted. So that's a positive. But obviously also Labour pitched very much that they were keen to try and drive the economy and drive growth. So they've got a tricky balancing act here to try and balance the 2 things. I think from a online recruitment platform and a staffing company perspective, and any other business that uses high numbers of contractors on 0 hour arrangements, then they're going to have some significant challenges in trying to think through the process around having now to offer regular workers guaranteed hours. Probably going to be limited to certain sectors than others. So probably large numbers of low paid workers, places like retail, construction, healthcare, logistics, manufacturing, those sorts of areas. That's probably where you're going to feel this most acutely. You've already got considerations there in terms of rights like predictable hours, removal of age-related national minimum wage rates is another proposal. So there's going to be certainly more cost coming into the supply chain. That's probably going to result in some businesses wanting to reorganise the workforce. Employers are going to try and want to manage and mitigate the risk where they can. So we certainly anticipate from Giant's perspective, there'll be an increase in businesses looking at trying to outsource the engagement of those temporary workers where they may have been comfortable before with that additional risk point. That could be the tipping point for them. I think the other thing that I would like to say as well, which is not really related to the bill, but just a general comment on this sort of cat and mouse chase between the law changing and how business reacts to that, is that I think there's a general view from the market that what we would all like to see is just a lot more enforcement of rules, whether that's new rules that are coming in here or the old rules that are in place. There's already a lot of legislation in place to protect workers, things like agency workers regulations. And I think over the years, though, that lack of enforcement means that those that wish to operate compliantly are often at a sort of disadvantage to those that don't always work within the rules. So I think it was also important to note that the government announced a new Fair Work Agency, which is basically a body to really try and enforce that the rules are followed. They've got a lot. This body's got a lot more inspection powers. It kind of amalgamates a number of other existing bodies that were around to sort of manage the market. And from my perspective, I'm certainly keen that actually HMRC and the government follow through with enforcement, as well as introducing further rules for us all to acknowledge and follow. A couple of weeks ago as well, HMRC also announced 5,000 new tax inspectors that they were looking at putting into the system. So perhaps this properly indicates that this government is serious about enforcement. We talked earlier about the increased activity from HMRC. So yeah, let's hope that drives the right behaviour and the market reacts properly. And for those that don't follow the rules, there's some sort of penalty for them. We'll have to wait and see.
Amazing. Thanks so much, Dan. And thanks, Nicole and Sam, as well, for all your insights during this session. I think I've certainly learnt a lot, and I hope this has been really useful for the audience so far. We're now going to move on to a session of Q&A. So I'm going to start to pick through some of your questions. We'll answer as many as we can, but there are a lot of you here today. So we'll also let you know a plan to follow up with any questions that we don't manage to touch upon.
You've got a lot to choose from, Betty. I think as we were talking there, we just kept seeing them continually ping in. So I think start at the top and work your way through.
But just to say to anyone who's asked about the recording, I will follow up tomorrow with that. So don't worry about that at all. Okay, so the first question that we've had today is the genuine right to send a substitute, even if they don't ever send one, still a really solid indicator for outside IR35?
It's definitely your wheelhouse, Nicole.
The short answer is yes. The slightly more considered answer is that the concept of substitution is absolutely a key indication of an individual worker being able to demonstrate that they are operating on a self-employed basis. The difference under the reformed rules are now it's not just about the individual worker thinking that they can send a substitute. It comes back to what's in the contract, so the contracts between the worker and the agency, and then the agency and the hiring organisation. And equally importantly, that this right to send a substitute isn't fettered, so that the client is in agreement to that, and that there isn't necessarily anything in the way of a contractor being able to bring a substitution into the business should that scenario actually arise. So from a client perspective, we always encourage organisations to consider what a strong and good substitution process would look like in their organisation. Think about time to get people into the business, any security restrictions, that sort of thing. So it's definitely a strong indicator of self-employment, but now more so than ever, post-reform, it's so much more on what the client organisation allows and the wider contractual terms, not just what the individual worker thinks that they are able to do as part of their engagement.
Amazing, thanks for that, Nicole. So the second question we've got is, if a statement of work includes the need to comply with certain client company policies, how is that viewed from an IR35 status point of view? For example, brand guidelines or information security?
Do you want to take that one, Sam?
I was going to leave to you, but no, I'll happily jump in on that. I think it's, and I don't think you tactically swerved it, but there was an interesting use of SOW within that, which I think
Yes.
sometimes does cover sometimes covers all manner of sins. But if we're talking about pure IR35 context here, then obviously it does vary on a case-by-case basis, but fundamentally a contractor should be an independent resource. If the guidance and dictating of outputs from the client organisation is too onerous, then that could absolutely be viewed as negative and indicative of employment. But ultimately, it is a sliding scale. So brand guidelines were noted there. If that's a case of you needing to have a business card that identifies you in the same way that any other employee of your client's business would do, that's not fantastic from an IR35 perspective. However, if it's simply a case of a contribution to a group output the contractor is part of, and that needs to fit in within an overall branding, then that's far easier to justify. So it's not a sort of a silver bullet test, and where it would fall into a categorisation, it would come under sort of the test around control, and there are much wider aspects of play there. It comes down to working methods at the top of the list there, and the ability for the contractor to work outside of any kind of framework that allows the client to dictate what that level of control is. So it's certainly not an area that should be disregarded, but it's only ever a contributing factor to a contributing factor. So it's relatively distant from a core decision-making point, I would say.
Amazing. Thank you so much. So we're going to go on to this question now. So someone said, hi, very worried about the impending Chancellor's new plans to increase business and national insurance contributions. How will that affect IR35 workers in an umbrella company paying for everything from their own earnings?
I'll take that one. So we don't know yet. Obviously, there's a lot of speculation about what the Chancellor's going to do around employers NI. But just as a reminder to everybody who may be not familiar with the umbrella model, in an umbrella arrangement, the umbrella company receives a rate from the person they're engaged with, which can be a recruitment agency or a hirer directly, and they have employment costs that they need to deduct from that money. So it's not the worker's money at that point, it's the umbrella company's money, and the umbrella will need to deduct the associated employment costs. So to the person's question there, yes, if the employer's national insurance is increased, then the amount of employment costs that will need to be deducted from that sum received will increase, and that will impact the gross pay for the worker. So once those costs are taken out, what's left over is then the gross taxable pay for the contractor. And so therefore, if there's an increase in employment costs, it would push down that gross taxable pay. So I think there is going to be a pass on of that cost through from umbrella companies through to contractors in terms of the arrangement there, because that's how the umbrella contract works. There's also obviously an alternative model to that, which is a PEO model, which some people may be familiar with, which is effectively similar to umbrella, where the employment of that worker is outsourced, but the rate of pay for the worker is fixed, and there's then an invoice that's charged up for the costs on top, which are then picked up directly by the recruitment agency or the hirer. So with workers engaged in that scenario, they wouldn't feel the same impact. That cost would be passed on in the invoice to the hirer, but their rate would remain the same. But the umbrella mechanism will potentially could see some reduction in people's pay because there's additional costs that the umbrella company needs to bear. So it's definitely one that we're keeping a close eye on, along with a whole other multitude of different things that may or may not come out of the budget. I think the Chancellor's done a great job of scaring us all to death about what might be said. I do wonder if it'll be as bad as what we think, but we'll just need to wait and see what comes through.
Amazing, thanks, Dan. I've also got this question, which is from a liability perspective, does it matter who pays for the IR35 status determination, i.e. the contract or the hiring organisation?
Want me to jump in on that one, Nick?
Yeah, by all means.
So in terms of payment for a determination, then no, it's a completely valid thing for a contractor to pay for their own determination, for a hiring organisation to pay for it, or for a recruitment business to facilitate it. Ultimately, there is an exercise that needs to be undertaken that ideally all parties should have visibility of. And if a contractor is looking to operate outside of IR35, something like ensuring compliance is a legitimate business expense that you would expect of someone in business on their own account. So no issues in terms of who pays for a status determination. One thing I would caveat and flag, though, is if insurance is involved, i.e. a policy that covers an IR35 exposure, do be aware of situations where contractors are required to pay for an insurance policy held by another party. If a contractor is arranging IR35 insurance, under the off-payroll rules, they have no exposure, and therefore they don't have an insurable interest in their client's position. Now, there is a bit of a debate around that concept, but it is certainly something that I would have a very close eye on if you're a contractor, and maybe push back and query if you're being asked to cover, from an insurance perspective, a third party's IR35 exposure.
Amazing, thank you so much. We've now got a question that lots of people have liked, so I assume lots of people are interested in the answer, which is, how long could you keep a contractor on an outside IR35 agreement before they are deemed as a permanent employee and not as a contractor?
This is a question that we get asked quite a lot, and there is a kind of widely viewed kind of misconception in the market that there needs to be a limit on the period of engagement that a hirer has with an individual limited company contractor, and the number that people often come back to is 24 months or 2 years. I'll come back to that because there are specific considerations around 2 years, but fundamentally, if a hiring organisation has the strong working practices and that they are treating contractors like bona fide self-employed businesses, and that they have a strong position on control, there's a strong position on mutuality of obligation, more importantly, there's a strong position on substitution as well, and that contractually that all stacks up, so long as the nature of the engagement that the contractor is still being engaged to provide. You can have a contractor who's engaged at a client organisation for 3 years if, for example, they were perhaps working on a long-tail project like HS2. So there are legitimate reasons where businesses can engage the services of limited company contractors on an outside IR35 basis for a few years. The challenge is always going to be, the longer a contractor is providing services into an organisation, the higher the risk is of that contractor becoming integrated into that organisation and becoming part and parcel of that organisation. So that can start to diminish, actually, is this individual legitimately self-employed? And I think more generally, organisations thinking about it from a tenure perspective is helpful from a general supply chain resource structure too, because if you've had a contractor in the business for a set period of time where there hasn't been a clear and distinct outlining or overarching project, then the question is, well, should this person actually be a permanent employee? Do we have a permanent requirement for this type of resource and service? And just coming back to the kind of the 24-month rule, the 2-year period, there are some specific rules in respect of expenses for small businesses, individual self-employed workers, where they can claim certain types of expenses for travelling to and from places of non-permanent work. After a 2-year period, a place of work is considered to be permanent. So there's something from a myth or misinformation perspective that hangs on that, but largely tenure isn't in itself a factor, but it all comes back to how the businesses are legitimately engaging contractors on an outside of IR35 basis. But it's something worth businesses and contractors themselves keeping a bit of an eye on, because tenure can kind of influence how a contractor is perceived and operates within a business, actually without that necessarily being the intention of the parties.
Thanks so much, Nicole, for answering that question, and thanks Dan and Sam as well for sharing your insights with us today. I think we're going to wrap up there. I know there are lots of questions we haven't quite got to, and we'll share a plan for getting in touch with you about these on the follow-up to this. But thanks again for your time today. We'll follow up tomorrow with the recording and also an opportunity to contact any of our speakers. But for today, thank you from us all.